What's happening, crypto fam? Get ready for a rapid-fire update that you absolutely cannot afford to miss. The market is moving faster than ever, and we've got the inside scoop on the biggest stories shaping the future of finance. We're diving deep into critical price movements, groundbreaking financial product launches, and the subtle shifts that could signal massive opportunities. From key price tests that could define the next bull run to innovative new ways to invest, this is your essential download. Let's get straight into it. First up, the king of crypto is facing a monumental test. Is September a make-or-break month for institutional confidence as Bitcoin battles to hold crucial support levels? We've got the charts, the indicators, and the expert analysis you need to understand what's really going on behind the scenes. Then, get ready for a game changer in the derivatives market. Coinbase is launching a revolutionary new futures product that could fundamentally alter how we access both top-tier tech stocks and digital assets. What does this mean for diversification and accessibility? We're also tracking the broader market sentiment. While some assets are showing resilience, others are experiencing dips. We'll break down the key price action and what it signals for the rest of the week and beyond. And finally, we're looking at a fascinating intersection of traditional and digital investment. A prominent figure is championing a new era, merging real estate strategies with the power of Bitcoin. What does this new approach entail, and who is behind it? This is Bitcoin Bulletin, and you're locked in for the most important updates. Don't go anywhere. Make sure you're subscribed and the notification bell is on so you never miss a beat. Bitcoin at a critical juncture. Will $100K hold? Bitcoin has recently dipped to $108,000, triggering a short-term correction that has seen strategic buyers accumulate approximately 4,048 BTC. This price action is occurring as key support levels, particularly around $107,000, are being tested. The market is closely watching whether these levels can hold, as a failure could signal a descent towards the $100,000 mark. Bearish technical indicators, including the Guppy Multiple Moving Average, GMMA, and MACD, are flashing warning signs, suggesting potential downside. The GMMA shows the short-term EMA band crossing below the longer-term band, indicating weakening momentum, while the weekly MACD histogram has dipped below zero, reinforcing a bearish trend. Analysts point to the possibility of Bitcoin testing the 200-day simple moving average, which hovers around $101,366, before potentially reaching the crucial psychological barrier of $100,000. Adding to the caution is the historical September effect, a phenomenon where Bitcoin has historically closed the month in the red 8 out of the last 12 years, with an average loss of about 3.8%. However, not all indicators are bearish. Historical patterns, similar to those observed in 2017, suggest that if Bitcoin can maintain support around the $107,000 level, a rebound towards $116,000 could be on the horizon. The macroeconomic environment also presents a mixed picture. A weakening US dollar, partly due to expectations of Federal Reserve rate cuts, has seen its 52-week correlation with Bitcoin drop to -0.25. This could bolster Bitcoin's appeal as an alternative asset, especially if institutional demand remains robust. A significant factor influencing institutional sentiment is MicroStrategy, now operating as Strategy, MSDR. The company's substantial Bitcoin holdings, totaling 597,325 coins as of June 30, and its recent qualification for potential inclusion in the S&P 500 could be a major catalyst. If approved during the September 2025 rebalance, it would represent a landmark moment for digital assets within mainstream U.S. equities. The market is now in a tense waiting period, with the next few weeks being pivotal. While technicals suggest caution, active accumulation by strategic buyers indicates a belief in a potential rebound, with some forecasts pointing to a rise towards $124,500 within the next 4-6 weeks. The interplay between technical indicators, historical trends, macroeconomic factors, and significant corporate actions will determine Bitcoin's trajectory. Market participants are keenly observing the support levels and the potential S&P 500 inclusion. Community discussions are buzzing with predictions, ranging from further dips to a swift recovery, highlighting the divided sentiment. But can Bitcoin truly break this bearish spell and reclaim its upward momentum? Stay tuned as we explore a groundbreaking new financial product that could change the game for both tech stocks and crypto. Coinbase's bold move, merging tech giants and crypto in new futures product. Coinbase is set to redefine the derivatives landscape with the upcoming launch of its MAG 7 Plus Crypto Equity Index futures on September 22. This innovative product marks a significant first for the U.S. market, offering investors a single futures contract that provides exposure to both the highly influential Magnificent 7, MAG 7 technology stocks, and leading cryptocurrency exchange-traded funds, ETFs. This groundbreaking offering aims to simplify diversification and enhance capital efficiency for investors looking to tap into both traditional and digital asset classes simultaneously. Brian Armstrong, CEO of Coinbase, highlighted the significance of this launch, stating, "We're launching the first U.S. futures that give exposure to the top U.S. tech stocks and crypto at the same time." He further elaborated on Coinbase's vision, adding, "We'll launch more products like this as part of the Everything Exchange." This initiative positions Coinbase as a key player in bridging the gap between traditional finance and the burgeoning digital asset space. Until now, no U.S.-listed derivative has offered such a combined exposure within a single contract, making Coinbase's new futures product a unique proposition. The MAG 7 Plus Crypto Equity Index futures are designed to meet three core investor needs: diversification across asset classes, capital efficiency by consolidating multiple exposures into one product, and access to innovation-driven growth. The underlying index is meticulously constructed to ensure balanced representation, with each of the 10 components, comprising the MAG 7 stocks and select crypto ETFs, holding an equal 10% weighting. This weighting will be adjusted quarterly through a rebalancing process, managed by Market Vector, the official index provider, to ensure the index remains reflective of current market dynamics and opportunities. The futures contracts themselves will be monthly and cash-settled, with each contract valued at $1 multiplied by the index price. For instance, if the index stands at $3,000, the notional value of one contract would be $3,000. This strategic move by Coinbase is part of a broader effort to expand its product suite beyond single-asset offerings into more complex, multi-asset derivatives. By creating a product that sits at the intersection of established equity markets and the volatile yet potentially lucrative cryptocurrency sector, Coinbase aims to attract a wide range of investors, from seasoned traders to those seeking simpler ways to gain diversified exposure. While the initial launch targets institutional and sophisticated investors, Coinbase has plans to extend trading access to retail investors in the coming months. The development is seen as a major step towards integrating digital assets more deeply into the traditional financial system, offering a glimpse into a future where traditional and digital investments are seamlessly accessible. The announcement has generated considerable excitement within the trading community, with many hailing it as a significant advancement for crypto derivatives and a testament to Coinbase's innovative spirit. Analysts suggest this could pave the way for similar hybrid products in the future. Will this groundbreaking fusion of tech and crypto futures pave the way for a new era of investment products? We're staying on the pulse of market movements, bringing you the latest on Bitcoin's resilience and other altcoin shifts. Bitcoin holds firm, but altcoins face pressure amid mixed market signals. As the cryptocurrency market navigates a complex landscape, Bitcoin has demonstrated remarkable resilience, maintaining a steady position near the $110,000 mark on Tuesday. This stability comes as other major digital assets, such as Ethereum and Dogecoin, have experienced notable slips, indicating a divergence in recent performance across the crypto spectrum. The overall market sentiment appears to be one of cautious consolidation, with Bitcoin acting as a stabilizing force while altcoins face increased selling pressure. Detailed analysis from Glassnode suggests that Bitcoin's recent pullback to $110,000 is relatively mild when compared to previous market cycles. Currently, only about 9% of the total Bitcoin supply is held at a loss, with unrealized losses capped near 10%. This stands in stark contrast to past cycle bottoms, where over 25% of the supply was in loss, with drawdowns exceeding 23%. Historically, full bear markets have seen more than 50% of the supply fall into loss, with some drawdowns reaching as severe as 78%. This data indicates a strong hodler base and a potentially healthier market structure compared to previous downturns. From a technical perspective, the market is closely watching key price levels. More Crypto Online noted that a dip below $109,210 would represent the first technical signal of a potential local top, suggesting that this level is crucial for maintaining the current positive momentum. Meanwhile, Coin Bureau's Nick Puckrin observed that Bitcoin is showing significant resilience, not only reclaiming previous highs from December, but also retesting both May's peak and the 100-day moving average. The $112,000 level is identified as a critical resistance point that needs to be decisively broken to confirm a continued bullish trend. Prominent analyst Michael Van de Poppe echoed this sentiment, describing $112,000 as Bitcoin's ultimate test. He believes that a clean breakout above this level would serve as a strong confirmation of the bull market's full return. "Good bounce back upwards," he exclaimed, highlighting the positive outlook contingent on overcoming this resistance. The performance of Ethereum and Dogecoin, however, paints a different picture. While specific reasons for their decline were not detailed in the provided snippets, their downward movement alongside Bitcoin's stability suggests a rotation of capital or sector-specific pressures impacting these altcoins. Traders and investors are closely monitoring these divergences, seeking to understand whether this is a temporary correction for altcoins or a sign of a more significant shift in market leadership. The current market conditions present a nuanced outlook, with Bitcoin's strength providing a potential anchor, while the weakness in other major cryptocurrencies warrants careful observation. The resilience shown by Bitcoin, despite broader market fluctuations, underscores its unique position within the digital asset ecosystem. The market is keenly focused on Bitcoin's ability to overcome the $112,000 resistance and the performance of other major altcoins. As Bitcoin battles key resistance, could a prominent real estate mogul be signaling a new investment frontier? We're diving into a fascinating blend of traditional assets and digital innovation next. Grant Cardone advocates for real estate and Bitcoin synergy in new investment era. Real estate mogul Grant Cardone is championing a new investment paradigm that strategically integrates traditional real estate ventures with the burgeoning potential of Bitcoin. In a recent discussion, Cardone outlined his vision for a new era where these two asset classes are not viewed in isolation, but as complementary components of a diversified investment portfolio. This approach suggests a forward-thinking perspective on wealth creation, aiming to leverage the stability and tangible nature of real estate alongside the high-growth, decentralized characteristics of Bitcoin. Cardone's emphasis on adjusted for risk, as highlighted by Zephyr, points to a sophisticated investment strategy. This implies a methodology that doesn't just chase returns, but meticulously evaluates and mitigates potential downsides associated with both real estate and Bitcoin investments. For real estate, this could involve focusing on specific market segments, property types, or geographical locations that offer more predictable cash flows and appreciation potential while minimizing exposure to speculative bubbles. In the context of Bitcoin, an adjusted-for-risk approach might involve strategies such as dollar-cost averaging, holding through volatility, or utilizing it as a hedge against inflation and currency devaluation, rather than engaging in highly leveraged or short-term trading. The synergy between real estate and Bitcoin, as proposed by Cardone, could manifest in several ways. One possibility is the use of Bitcoin as a financing tool for real estate acquisitions or developments. As Bitcoin gains broader acceptance and liquidity, it could serve as an alternative source of capital, potentially offering more flexible terms or faster transaction times compared to traditional lending. Furthermore, real estate itself could become tokenized, with ownership stakes represented by digital assets on a blockchain, making properties more liquid and accessible to a wider range of investors, including those who hold Bitcoin. This intersection of physical assets and digital technologies could unlock new avenues for investment and wealth management. Cardone's advocacy for this integrated approach comes at a time when both real estate markets and the cryptocurrency space are undergoing significant transformations. While real estate continues to be a cornerstone of wealth building, its accessibility and liquidity have historically been limited. Bitcoin, on the other hand, has matured from a niche digital currency to a recognized asset class, attracting institutional interest and demonstrating its potential as a store of value and a medium of exchange. By combining these two powerful forces, Cardone aims to provide investors with a more robust and adaptable framework for navigating the complexities of modern finance. His perspective challenges conventional investment wisdom and encourages a broader view of asset allocation, where traditional and digital assets can work in concert to achieve long-term financial goals. Cardone's perspective is generating buzz among investors looking for innovative ways to diversify and grow their portfolios in the current economic climate. This blend of the tangible and the digital is truly shaping the future of investment. And that's a wrap on today's top stories. But don't go anywhere, we've got a lightning round recap coming right up. Bitcoin faces a critical test around $100K as institutional confidence hangs in the balance. Coinbase is launching groundbreaking futures that merge top tech stocks with crypto exposure. While Bitcoin shows resilience near $110K, some altcoins are slipping. And Grant Cardone is pioneering a new era by blending real estate and Bitcoin investments. That's all for today on Bitcoin Bulletin. If you found this update valuable, hit that like button, subscribe for more market insights, and ring the notification bell so you never miss a beat. Share your thoughts in the comments below and follow us on all social platforms for real-time updates. Thanks for watching.